Right there on the tube of YouTube. Welcome into Ask a Bookkeeper with Steph Conley. It's Steph's bookkeeping service. And about at a minute 20, we go live in 3, 2, 1 on the Book of Face. Facebook, everybody, how are you? Ask a Bookkeeper, first one for 2020. Steph Conley. Steph's bookkeeping service. Hang in there.
I never know which camera to look in.
In about 1 minute, you're just going to look over your left shoulder. Right there. That's the guy. Okay. That's it. Hang in there. My phone just said 21.6 is live now.
So now if I started like this watch party, then people that aren't super Facebook savvy can find it, right?
That's right. That is correct.
They can hear me right now.
That's it. Alex Kolkowski, Steph Conley, how are you? No, she didn't want to sit in the other chair because then she couldn't see the Jumbotron.
Yeah, I can't see the questions.
So we're going with the side view of her.
I think that's what people are used to, though.
Let's go live here. Okay. Welcome in, everybody, to Ask a Bookkeeper, End of Year Pain Points with our host, Steph Conley from Steph's Bookkeeping Service. Steph, take it away. How are you?
Hi.
Absolutely is.
I'm Steph Conley. I own Steph's Bookkeeping Service, and so it's that time of the year now when we're going to all of our clients' offices or we're doing our year-end review and getting everything ready and prep to present to CPAs. So I'm just jumping from business to business to business until I get through my whole list of clients. But it seems like everybody has similar pain points. So I assume that other business owners out there also have some of these concerns or questions. So I guess I'll just dive right into one example of a pain point that I've come across today a couple times was the net profit. That a lot of people look at their net profit and they're like, well, I don't have that in my bank account, so the numbers must be wrong.
Right.
And so we kind of take a look at it and dive through it. And for example, one of my clients, they're incorporated. So they should be on payroll for the owner's salaries. They should do payroll versus distribution, because all those distribution payments will go and be reported on your balance sheet. So that doesn't come off the bottom line of your profit and loss statement. So if your net profit was like $200,000, we'll say, but you took $70,000 in distribution, then that's why it's still so high, and you don't get to write off that $70,000 because you took that money tax-free. So if you were on payroll, then that payroll expense and the payroll liabilities taxes and all that stuff would come off that. So that $200,000 then would decrease, by roughly, in the $60,000 to $70,000 range after payroll taxes and salaries, and then you've already paid those taxes into the government entities, and you won't have to pay income tax then on those because you already paid.
Right, but a lot of business owners don't like being on payroll.
Right. Well, they have the concern that sometimes when they're a startup company or they're so they're like a startup or they're kind of in a growth phase where they're kind of cash poor, that they're like, well, I can't cash my checks. Mm-hmm. But there's nothing in the rule book that says that you have to cash the checks the day you get them. I know that's what most people are used to doing. Right. But if you hold two or three paychecks we'll just use round numbers because it's easy. So if you hold 2 or 3 paychecks that are $500 each, but then a month and a half later, you have some extra cash in the bank account. So instead of cashing your paychecks, you're taking a draw distribution of the $1,000 when you could have just cashed 2 of those really old paychecks.
Right.
Or
that's brilliant, actually. Yeah. I wouldn't have thought of that either, to be honest with you. There's a question from the audience. Alex from Huntley says, what if you suck debt receipts? Does your credit card statement count, or are you a little screwed on that one? Just asking for a friend. I keep every freaking receipt.
the bank statements and the credit card statements don't count because there's no detail as to what you purchased. So if you go to somewhere that could be utilized as a business and a personal store, like Walmart, for example, you could get groceries there or you could get office supplies there. There's no way to determine what that $30 purchase was, if it was personal or business. So we always recommend that you keep the receipts, but I don't like having boxes and boxes and boxes of paper around. So I will set clients up with an app called Expensify.
Expensify.
So you could do, it's really good for clients that have billable expenses that they incur throughout travels that go to clients, or they have non-billable expenses, or if you have staff in the field that need to get reimbursed for gas or tools or something, you could identify and specify everything in this app, and then it integrates and uploads with QuickBooks. You could also do you could track hours in there too, but QuickBooks Online also has an app that you could take pictures as well that uploads into the platform.
Yeah, I thought, because I just QuickBooks just had a thing that said, hey, you can take pictures of the receipts, and if you have the app on your phone, right?
Yeah, Danny DeVito promotes it all the time.
Yeah, right.
Yeah, so you could take the picture. There's a new section that you'll see on your QuickBooks Online in the banking tab section. It says receipts with a box in pink that says new. And when you click on it, it will pull up all the receipts that you've uploaded, and then you could link them as those expenses are coming out of the bank account.
Nice.
You could also do that with vendor invoices as well, so you don't have to keep a filing cabinet for those.
Now, what if you're a small business that you did a lot better than you probably thought you did, so you didn't keep a lot of those receipts? Are you screwed?
I would just say that you're not audit proof. If you
Fair enough.
If you did not keep the receipts and you get audited and it's a questionable transaction where it could be either a business or a personal, the state or the government will always weigh in their favor that it is, personal, and that you need to be taxed on it.
Yeah. Interesting.
So
just asking for a friend myself.
So yeah, if you we always recommend that you have the receipts or the vendor bills or just any type of backup or paper trail. Especially another pain point that we've come across is that people that are small businesses, they kind of commingle. They commingle the business account and the personal account, and they forget that there's a need for a paper trail. So they let's say they have dogs and they go to PetSmart and get some food, and they put it on the business account because it has, whatever, more funds in it. And so they code it correctly to the business, the owner's personal expenses. And so it goes on the balance sheet. So they code it correctly. But if you have a lot of that, it's very difficult in an audit to decipher those transactions back and forth. You need to establish some type of boundary. So if you are going to have the business pay, like if you're going to use the business funds to pay your mortgage or utility bills or dog food or whatever, you're better off taking a check and transferring the money into your personal account and then using your personal account to do and proceed with that transaction versus just coding it to a personal expense of ownership through the business. Because then you have no personal transactions.
Right. I get it.
So you want to keep those waters like kind of clear and not muddied.
That's it. What else? What are some other pain points?
I guess sometimes I've seen a couple situations, unfortunately, where people have thought they were killing it. And when they actually saw the numbers, they were taking a slight loss. And they didn't see how that was even fathomable. But they were using pricing structures and bid sheets from 2013.
Yikes.
So they didn't take into consideration that, there's inflation, there's tariffs, there's cost of living increases, everything happens. And I think the eye-opening experience for them was when they saw a competitor's bid on the same project and where they came in at versus where they were. And with it being like a In this case,
Okay.
it was like a $50,000 difference in the bid, which is a lot of money.
That's a lot of money.
So when we're doing these job costing things, it's always good to look at your current pricing. It's always good to look at and update your costs and your products and services. That's something that I don't see happen all the time.
Right. A big industry would be the food industry, I'm sure. Those prices vary up and down quite a bit. And if they're not
Right.
working with you or,
Right. I mean, like, for example, I'll use plumbers as an example.
Sure.
So a plumber, if they have an account with whatever, a supplier, they could buy a stick of pipe for like $2 a foot, $1 a foot.
Yep.
But if they don't have an account and they just go in there off the street and purchase, then you're paying maybe $5 to $6 a foot.
Interesting.
So you're paying full retail by not having the vendor account. So then now you have to take that retail price and then mark it up. And then how do you mark that up to your client to sell that to them when they know they could go to Home Depot and buy that same pipe for cheaper now
For
at that
$5,
point?
right? Yeah, right.
So you just have to be kind of aware of where you're buying your products and have complete control of your costs when it comes to things that are within your control, like materials for sure is 100% within your control as a business owner.
So how many of your clients are surprised when it comes to tax time?
I'd say probably slim to none because we have our monthly and quarterly meetings. I do some minimal tax prep on the quarterly end with some of my clients that are LLCs so they could send in their estimated payments. So they kind of know where they're at. I usually, with clients that are kind of running tight, I usually recommend that they open up a secondary bank account to save them from themselves from using that money. So they could have their everyday checking account for operations, do whatever they got to do in there, but then open up a secondary or even like a third account to just put their tax money in or just run payroll through. Or, you could have multiple accounts, which will help you.
Right.
It will help you budget better. It will help you control the cash flow better. It will protect you from yourself with spending. Because I can't tell you how many times I've seen people at the end of the year be like, oh, I have, $40,000 in the bank. This is great. And they buy a truck and then they have a $65,000 tax liability. And then they're like, oh, that's what that money was for.
Oops.
Like, some people forget that that's not
Absolutely.
their money.
Yes.
Oh.
Move, Steph, so we can see her.
Sorry.
Well, we're just talking. The question that I guess I would have is, if I am not working with an accountant at this point, and I've been in business, this is my first year in business, are you still able to help me, or is it too late?
Oh, no, right
for
now.
2019, right?
Oh, yeah, no, right now I'm doing a lot of cleanup work. So I have some people that give me the whole year's worth of transactions that we're going through and building a QuickBooks file for or an Excel document for them to be able to present to their CPA. Because for incorporations, if you're not filing an extension, your deadline for filing is March 15th. Otherwise, you need to file an extension. And then for LLCs, it's April 15th when everybody else is. But again, you could file the extension.
So Steph's Books is really ebony, and the tax accountants are ivory. You live together in perfect harmony, right?
Uh-huh.
Side by side.
Yeah.
And like it is on the wall. Wonderful. Of course, if you need to get a hold of Steph, you can always reach her at stephsbooks.com or steph@stephsbooks.com, or give her a call at 847-942-3004, or shoot her a text as well. End of year pain points for small businesses, even middle-sized to large businesses, they don't vary too much, right? They're all kind of the same pain point.
Yeah, I think that everybody experiences this pain point during transition. I mean, when you went from being a W-2 employee to owning the radio station, and making that financial transition and learning how to spend your money accordingly, or
I am horrible at that, actually. I sit on checks and
well,
people, my clients will be like, have you could you cash that? I'm like, I'm so sorry.
yeah, so with vendors or employees that hold checks, what we do for clients is we put those checks in their QuickBooks file. So this way then, so like example, if I wrote you a check for I don't know, $500, and it was check 1234, and let's say you waited 45 days to cash it, I already put it in my check registry in my QuickBooks file. So this way I know that I don't have that $500 to spend no matter how long it takes you to cash it.
Let's say it is January 10th, 2020. And the business owner didn't put any entries into QuickBook.
Okay.
Is that an issue?
I mean, it's not uncommon.
I'm asking for a friend again.
So what you could do, which is nice because a lot of banks like Chase or Bank of America, I think PNC also has the feature where you could download all of your bank transactions to a CSV file, which is an Excel document.
Right.
And then you could upload it in one big file to QuickBooks. And then you can go ahead and categorize them out, or you could pre-categorize them on the spreadsheet. You just add like another.
Yeah, you had me at spreadsheet. When you said categories, you lost me at that point. Thank you.
But yeah, you could do that.
That's
where you're
why
not,
a good bookkeeper can help a small business.
Well, this way then you're not manually entering each individual transaction. You could upload them all, and then let's say you go to the same gas station to get gas in your car every time. Then if once you categorize it the one time to your fuel costs or car costs or however you have it set up, then the following transactions associated with that gas station turn green. So you know that that's your common category that you put that in. Oh. So you could kind of batch it then.
Nice.
And so you could select, all 100 of those and then say yes, versus having to do each one individually.
And of course, if you visit stephsbooks.com, you'll see some of those examples. Yeah. You've got some videos and done some things like that. So
yeah, we're in the middle of redoing our website. So that new website should be launching, I think, as long as I stop dragging my feet, it should be coming any day now. And then we're going to upload some of those tips and tricks videos for everybody to watch.
Absolutely. We're talking about the end of year pain points when it comes to bookkeeping, taxes, things like that. Of course, you're not a tax accountant, but what you do is bookkeeping to prepare the books and prepare everything so that the accountant can come in and do their job relatively swiftly and easily.
Yeah, that's the hope and the plan with it all, because I'm more cost effective than a CPA would be, which, rightfully so with the continuing education that they've done.
Oh, yeah.
So it makes their job easier, which then in turn saves the client money, which then everybody's happy. But the only thing that I have to worry about is that I think only a few of my clients share the same CPA. Otherwise, everybody has a different CPA. So I have to have meetings with several different CPAs throughout this month.
Absolutely. So as a business owner, you have, let's say, a couple of employees and you pay them mileage. And so they submit a mileage form.
Okay.
A simple spreadsheet, perhaps. Talk to me. Is that a pain point, or can I just say, I spent, I paid out about $5,000 in mileage, or do I need to produce those forms? Do I need to produce where they went? What kind of proof do you need there?
It's always best to CYA. So I would say that each employee needs to submit the form with the fact that if they left from the office to client A, and then they
Mhm.
left the office and went to wherever, maybe they went to a vendor house and picked up supplies and stuff like that. Because if you did get audited, they will want to review all of those sheets, and they will want to they'll do some spot checking and confirm that mileage is correct. I don't know if some owners know this as well. Some people have a vehicle that they use for both personal and business, which is pretty common. You need to separate out your business related mileage and your personal related mileage.
Yeah.
And your personal related mileage is called an auto fringe benefit. And if you're an incorporation, you do need to cut yourself kind of a bonus check at the end of the year. It's a $0 check, but you do need to pay taxes on that auto fringe benefit.
Awesome.
So
that's interesting. Yeah. I think that would always be a pain point for me, just because I would have been like, all right, well, how many miles you drive? Great. There you go. 50 cents, whatever it is.
Well, they do have apps that you can get that will track your mileage for you. QuickBooks does have an app on the software that you can use. There's a little button that says mileage. And if you're the master admin on the file, it will track. You could enter and track your miles.
So when it's business, you click it and it goes, because I had tried a couple different of those apps, but every time I got in the car, it's like, oh, you just drove. And you only got like 5 or 6 of them or something. And I was like, well, this is horrible. Just every time I get in the car, it's just tracking it. It's no good.
But yeah, so you could link it to like your calendar or do different things like that for your mileage tracking. And I think right now, I'm pretty sure, I think it's like 58 cents a mile that you're paying out on those.
And when it comes to receipts, again, if you haven't kept them throughout the year, it's hard to go back and reproduce them. So are you just saying, well, I guess I'm not going to get any money for that? Or what do you suggest to do?
I think the transactions that look like they could be either way.
When you say either way, either personal or business.
I would probably just take them on the personal end, and just pay the tax, and then it's lesson learned for you for next year to make that policy change.
If I am taking a client to lunch and I get lunch, all I have to do is put the client's name or business at the top of the receipt. Does that work?
Yeah, you could put that on there, and then it's identified. And then also with your mileage report, also showing that you drove to that business appointment. So you have the proper backup and data to prove that.
But that's all it takes.
Yeah, it's pretty simple.
Nice. All right.
Yeah, they don't try and make it difficult.
Right. Well,
but yeah,
just personal and business is, I don't know. Here's a Chili's receipt. Put somebody's business on there. I don't know.
Well, I mean, if you're in an audit, sometimes they will dive in kind of deep on certain things.
Okay.
But it's, again, they kind of, when they're in an audit, they spot, depending on which government agency comes out, depending if it's the state, it's the Department of Employment, or if it's the Fed, they're going to be looking at different things for what their triggers are.
For making it up or whatever.
Right.
Interesting. That's Steph Conley from stephsbooks.com, Steph's bookkeeping service. If you have any questions for her for end of the year pain points, go ahead and let us know. Put them in a comment, or you can reach out to her at 847-942-3004 or send her an email at steph@stephsbooks.com. Any other pain points that you thought of covering today? What are maybe a small one that gets overlooked often?
I guess direct labor expense.
Okay.
I was going through this with a client who does flat rate billing to their clients. And so they have contractors or employees that they pay out to complete the scope of work. And so we were going over the percentage that they've allotted for the scope of work to gear it towards labor.
Right.
And a lot of people don't think about that component of it. So if you as an employee, so if the contract's $1,000
Right.
and you as an employee take 7 hours to do the work, well, then that takes up 70% of the contract, not including any other additional expenses that would need to be used to complete that project on a monthly basis. So you need to think about different ways to create efficiency within your projects and your client and your employees. So either you can pay your employees a direct percentage of that contract, and you as the business owner know that you're allotting 3 to 5 hours for it. And if they complete it in 2 and it's good work, then good for them. The employee won on the deal. If it's 7 hours that it takes them, then good for you as the employer, because then you won on the deal and protected your margin. And
Awesome.
so a lot of people that have that billable hour or they have those flat rate contracts need to take that into consideration and separate the labor from the direct labor versus their administrative labors for overhead.
Right. That's interesting. I wouldn't have thought of that either. I could see where that could be a stumbling point. At what point as a small business do you say, okay, I can start taking money from this?
Well, if you ask a CPA, they say that usually you should pay yourself a going rate for that industry to verify your margins. So whether or not you cash the checks or just immediately cash it and then reinvest right back into the business and keep none of it, at least it gets you in the habit of paying somebody to do the work, knowing what your margins are.
Sure.
And then it also helps you to feel like you're valuable yourself. I mean, nobody really likes working as hard as an entrepreneur does to not be able to get like a paycheck or
right.
something.
Right. Or you're looking, and then at the end of the year, you didn't make what you thought you would, and you're like, oh gosh, I get to give myself $20 or whatever. Right.
So this way, then by doing that, it also helps you to be able to scale the business.
Sure.
So you know that if you get replaced by employee A, then you already know what your margin is, where you need to be at, what's going on. Is this scalable? Do I need to change my rates? It gives you that option and opportunity as you grow into needing an employee. It helps protect your bottom line for that.
Interesting. Cool. Yeah. So, I mean, and that's a great way to do it. And that's an interesting way to do it. I, again, wouldn't have thought about that. That's why I asked the question. I always got to figure it out. What's going on over here? Something's vibrating. Never mind. This is Steph's books. Ask a bookkeeper. I don't even Steph's books. This is going off the rail there. I don't know what's happening. So we got about 3 minutes and 24 seconds left in this episode, the first episode of 2020. End of year pain points. And if you have questions, feel free to shout them out to us. If you just want to say, hey, again, shout it out to us. We'd be glad to chat with you. If you haven't got a bookkeeper, I highly recommend going to www.stephsbooks.com and see what they do and how they do it. You won't be disappointed for sure. And what a valuable part of your business she will be, which is fantastic.
So I have a question on the watch party. Yep. So they want to know, how do you troubleshoot when you're not profitable? So there's several different ways that you could probably tackle this, but I would start off by looking at an overview of your P&L of what you've expensed out, what your revenue was, and then from there kind of look at your biggest cost items. So the things that are sucking up most of your costs. A lot of times, unfortunately, it's meals and entertainment that I see with some clients, and then they wonder why they're not profitable. Well, you kind of were profitable, but you went to Texas Day Brazil 17 times, and you
do not need to buy a coffee every time you go to meet somebody at Panera.
Right. So there's certain things that we could do to then help put together a budget based off of the analysis that we would do on the file. And then we could help you kind of help yourself in that aspect from an overall view of the company. If you're somebody in the trades or you do something that involves job costing, we can create individualized P&Ls for each of your jobs and kind of go through and see what caused that particular job to derail. Was it misordering of materials? Was it the labor took too long? Is your pricing just not, fitting for the current industry? So there's several things that we could look at, but they could give us a call and we could dive in and kind of look at what happened and see if we could help them get that fixed for 2020 moving forward.
Nice. And that brings us into the last minute, which is a perfectly asked question and perfectly timed. Check her out at stephsbooks.com. The new website's going to be coming soon. I think you're all going to like it from the conversations we've had. And from what I've seen, you're going to have a lot of, you're offering a lot of tips as far as bookkeeping ideas and things for people on that website and social media as well this year. So there's going to be a lot of information you're going to be giving out, really to put yourself in the guru space, as I would call it. Ask a bookkeeper. And the best thing that I can say is, if you aren't working with a bookkeeper, call her, reach out to her, find out about what she does, because she's amazing.
Thanks. Yeah, our consultations are free, so I guess all it would be is your time.
That's it. So for 21/6 The Net and everybody that's involved here in the production of this show, for Steph Conley, give her a call, 847-942-3004, www.stephsbooks.com, or reach out to her through email at steph@stephsbooks.com, and make 2020 the best year possible. Thanks for tuning in, folks.
Bye.
All right, what I need you to do